Hello everyone, and congratulations! You've made it to the end of the course. This is our last video of the semester. In this video, we're going to wrap things up by taking a look at how QuickBooks handles financial reporting. And we'll be working through Chapter 10 of our textbook with the Mookie the Beagle concierge activities. But we're going to start with something a little extra, a formal bank reconciliation. In a previous chapter, we had discussed bank feeds, but the text didn't ask us to perform a bank reconciliation. I talked about it a little bit in the video, and the text talks about what a bank reconciliation is, but we haven't done one. So we're going to do that today. In the earlier chapter, we matched transactions from a bank feed. We simulated what it would be like to connect our bank account directly to QuickBooks Online by uploading CSV files that contain bank transactions, and then we compared those transactions against the records inside of QBO that we manually had entered. And that is a good practice. Matching transactions from a bank feed against what you've entered into QBO is going to help you keep a finger on the pulse in terms of what's happening to your checking account as well as what's happening to your credit card accounts. But reconciliation against the official bank statement is the best practice to ensure your records truly line up with the bank. From there, we'll move on to the reporting side of QuickBooks. You'll see how to generate and customize various different kinds of reports, financial statements, management reports, and customer and vendor reports. The goal here is to get comfortable pulling the information you need when you need it and presenting it in a clear way. So that's what we'll be covering in Chapter 10, putting everything together with reconciliation and reporting to close out the semester. And to start things off, I am going to start with the reconciliation process. And what I've done is in our Canvas course, if I open that up real quick, under the course resources, I have placed bank statements for both Mookie the Beagle Concierge as well as Hafra Cyber. And we're going to need both of these. Today in this video I'm going to show you how to do the Mookie the Beagle bank reconciliation, and I'll have you do the same thing on your own for Hafra Cyber. Now we would also want to reconcile our credit card accounts, but for time purposes and just to give you a little bit of exposure to this, I'm not going to ask you to do that. So the first thing I want you to do is make sure to download this bank statement PDF, and we'll need to pull that up right away. Okay, so it's downloaded, so I'm going to open it up. All right, so I have it here on screen, and we can see here that Mookie the Beagle started operating in January of 2025, and that's why the previous balance is showing as a 0. As of January 1st, it was 0 because the company was created in January. Then we have the total of the deposits and credits per the bank. If you were to look at this section labeled deposits and sum all these amounts up, that's how they arrived at this amount. The next line item there is the checks and debits total. Similarly, we have two sections here, checks and debits against the account. If we were to sum all of these amounts together, that's where the bank is getting this amount. So what they did is they took that beginning balance, which was 0, they added these deposits, they subtracted these checks and debits, and that's how they arrived at this ending balance. There were no service charges nor interest earned for this bank account, so we don't see those, but those could potentially be involved in the calculation as well. You can see service charges would subtract and interest earned would add to the balance. Now I'm going to snap this off to the side so I can get inside of our QBO file and start working the bank rec. To reconcile our accounts in QBO, you can mouse over My Apps, go to Accounting, and then you'll see an option for Reconcile. So the first thing we are asked is which account do we want to reconcile. We are reconciling the checking account per this bank statement, so we could select our credit card as well, but today we're just demonstrating how to do it with the checking account. And then we have some information that we get from the bank statement. Let's see here, it says the statement ending balance. So we go to the bank statement, we find the ending balance, and we enter that amount into QBO. Then we enter the bank statement ending date. So we look at the date for that ending balance and we type that in, January 31st, 2025, and then we select Start Reconciling. All right, so now we're seeing activity inside of our checking account per the records in QBO. So here we see all the transactions affecting the checking account within our QBO system. And what we're going to be doing is comparing these entries against the entries that we see on the bank statement. Now you'll notice that we have this column for check marks, and some of the items already had a check mark. That's because we used the match feature in QBO in an earlier chapter, and we've already matched these transactions against the bank's records from the feed. Now we're going to still go through them and make sure that they haven't changed in case there was any errors in the feed. This is a more formal process, and we want to make sure that everything's up to speed here. So the first couple deposits, we got 40,000 and 20,000. Those do appear on the bank statement. We're just sort of working down the list. This column's for deposits, this column's for payments. On the bank statement, this section here is deposits, and then payments are going to be in both checks and the debit sections. So just sort of scrolling down the list right now, focusing on the deposits. So it does look like that 305.20 is on the bank statement and in the QBO system, so that one's good. And the next one's 2,000. Yeah, we got that. And let's see, the next one's 160. We have that. 260. Yep. 600. Okay, so we're missing that 7,200, but well, there it is later. Okay, that's there. And then let's see what else. We've got this 5,760. I don't see that one. Oh, yep, I do right there. And then 5,940. So then we have one deposit that's showing up in QBO here, $1,655.20, that isn't listed on our bank statement. Looking at the date of that deposit, it looks like it was at the end of the month. It's probably a deposit in transit, a deposit that we've recorded but hasn't cleared our bank yet as of the end of January. All right, so now we're going to move on down to our checks. With these, we're checking both the check number as well as the dollar amount. So check number one, $198, already has check mark, that's good. Check number two, $720, that looks good as well. Check number three, $540 in both sets of records, put a check mark there. Check number four isn't on the bank statement. We'll come back to that in a moment. Check number six, $1,720. That matches the detail on the bank statement, so putting a check. Check number seven, $500. That matches the bank statement as well. And then it looks like we had check 5 down here. That is not on the bank statement, and also check 8 is not on the bank statement. So it appears that checks 4, 5, and 8, they're listed here in QBO, but they're not on the bank statement. Those might be examples of outstanding checks, checks that we wrote that haven't cleared our bank, perhaps because the recipient might have not cashed them yet or cashed them towards the end of the period. So those we're not going to check. We'll move on to these debits. These are also going to show up in the payment column, but they won't have check numbers next to them. So we're looking for amounts. So we got 2,000 on the 5th. It showed on the bank statement on the 6th. That looks like the same one. That already has a check mark. We'll leave it there. Looks like we have one for 1,840. We have the same on the bank statement. Already has a check mark, so we'll leave that. Looks like we have a transfer here, $20,000. We need to check that one. And moving on down the list, we've already accounted for the checks, so I'm sort of ignoring the check numbers here. And then we have one item here that doesn't have a check number. I don't see that one on the bank statement in the debit area. And then we do have a $100 item. It's got a note of debit. That one does appear on the bank statement, so I'm going to check that. And then we have this 1,320 showing up in both sets of records, and these last two items have check numbers, so I believe those are outstanding. And then let's see what else. We had this credit card payment as well, and that one is also not listed on the bank statement. So now that we've done that, we can see at the top that we've reconciled the difference down to 0, and that's what we always want to see here when we're on a bank reconciliation form, is we want to show this difference is 0. We want to see this green check mark. That's when we know that we've done things correctly. If we haven't, then we're going to have to spend some more time and figure it out. We won't want to save this until we get this 0. And if you need to save for later, you can always do that, or you can close without saving as well. But you only want to hit finish now if you actually got this reconciled and it shows a difference of 0 with a green check mark, which we do. So I'm going to maximize the screen now and finish now. Okay, we get a confirmation screen, and I'm going to click done. One last thing to mention about the bank reconciliation: if our bank statement did indeed have any fees that were charged by the bank, or if there was any interest earned or anything like that that weren't in the company's books but were showing up on the bank statement, the reconciliation form doesn't have a spot for that. So what you'd have to do is enter that separately into QBO. You could do that in a variety of ways, like you could create a journal entry in which you recorded it, or you could do it through other forms as well. So you have to be aware of that in case your bank statement has those types of transactions on it that aren't in QBO but are on the bank statement. All right, so now we're going to move into what's actually in Chapter 10. But before I do that, I want to make a quick note here. When you do the Chapter 10 HAFRA cyber activities, before you do the financial statement stuff that's in the book, I also want you to do a bank reconciliation for them. And I've placed the HAFRA cyber bank statement on the course resources area of Canvas as well. So go through that same process with HAFRA cyber. I'll be looking in your company files and make sure I see all those check marks and can see the reconciliation and that it balanced to 0. All right, so getting back to QBO, and now we're going to take a look at reporting in Chapter 10. So Chapter 10 starts off with a discussion about the accounting cycle again, and we already discussed that in the previous chapter, so I'm not going to go through all those details again. But in Chapter 9, we talked about the unadjusted trial balance. We made the adjusting entries to get the account balances that needed it up to date, and then we looked at the adjusted trial balance. And I showed you in the Chapter 9 video what those balances should look like for Mookie the Beagle Concierge at that point in time, and you can compare your balances against those that were detailed in that video to see if you were on track. Once that adjusted trial balance is ready to go, now we're ready to prepare our financial statements, such as the income statement and the balance sheet. And we are going to move on to that. So they do ask us to take a look at the adjusted trial balance again in Chapter 10. It hasn't changed because we haven't entered any new transactions, so it should still be the same thing as in Chapter 9. So I'm just going to sort of flip through that. So get into the reporting section of QBO, which we've done quite a few times in the course. We mouse over reports, and for right now I'm going to select standard reports. So when we pull up standard reports, we have them grouped in these different categories. At the top of the list we have favorites. These are reports that you have marked as favorites by placing a click on the star next to them. They'll show up top here. So always the favorites up top. So then they have these different categories: business overview, who owes you, and so on. So you can browse and take a look at all the different reports that are available in the system, but if you know the name of the report that you're looking for, you can also just type it in up top here. The business overview section is where we're going to find our financial statements. So we see that we have the balance sheet listed here, as well as the statement of cash flows, as well as the income statement. But instead of calling it income statement, they called it the profit and loss statement. We've got different iterations of the profit and loss statement, as well as different iterations or versions of the balance sheet, depending on what we need to look at. So for right now, we are going to take a look at the profit and loss statement. So I'm going to select that. And at the top of the report, we get this ribbon here, and we can make some changes in here if we want. So we're going to make a couple changes. The income statement is going to show revenues and expenses that occurred during a specific period of time. And because it's showing activity during a period of time, the from date and the to date here are important. So we're just trying to report out on the month of January, so January 1st through January 31st. So I need to change my to date. And now my report has refreshed, and none of the numbers had changed because I hadn't entered any transactions after that date. But it's possible that if you made a date error, your numbers could change depending on what dates you selected. Here the text says to make sure that we're using the accrual method, which it's already set up that way. And the accrual method means that revenues are recognized when they're earned, when the services are performed or the goods are delivered, and expenses are recognized when the assets or services have been used. And we want to compare that against the other basis that's listed here, which is the cash basis of accounting, which recognizes revenues when they're received and expenses when they're paid for. So when you make that change from accrual to cash, it also shows up on the report itself. You see it here in the footer. The text also asks us to make some formatting changes to this page a little bit here. So to make those formatting changes, I'm going to click on the General Options button. And they ask us to show negative numbers in a particular way. There aren't any negative numbers on this income statement. But if there were, we would display them with parentheses per the book. And they're actually asking us to save the profit loss as a template. So the template would, if there was ever negative numbers on the financial statement, it would show them in parentheses. The other thing that I want to make sure that we do here is that we don't clutter up the report with a bunch of zero amounts. So I've got the checkbox that says don't show zero amounts. Otherwise, it would show every chart in our chart of accounts that was either a revenue or an expense, regardless if it had a balance or not. So there could be lots of accounts that weren't used. It just sort of clutters up the report. So once we got a report like this set up the way that we want, we can save the customization. So to do that, we go to the Save As button. You got to give the report template that you're saving a name. I'm going to call it Profit and Loss. So I'm going to get rid of the extra words at the end there. And the text asks us to put this report into a group of reports. So I'm going to click on that arrow and then I'm going to select Add New Group. And here we're going to type in the name of the group. We're going to type Financial Statements. And then I'm going to click Save. And I'm going to show you a couple other things real quick with this profit and loss statement and just reporting in general. So if we wanted to send this to someone else, you can click on the share button here and you can see you could export it to different file formats and then you could maybe email it to someone. Alternatively, if you click on the More Options button here, you see that you can also email the report to people directly, or you could set the report up so that it automatically get emailed on a regularly scheduled basis. So to sort of recap here, we prepared the profit loss statement for Mookie the Beagle for January of 2025. The date that the profit loss statement covers is the entire month. So the from date and the to date are really important there for an income statement. And the statement shows the income and revenues the business earned during a period, as well as the costs and expenses. And then it takes the difference between those revenues and those costs to determine the net income earned during the period, or net loss. If the revenues exceed the expenses, which they did in this example, the business earned a net income. But if the expenses exceed the revenues, then the business incurred a net loss. So now we're going to take a look at another financial statement. We're going to look at the balance sheet. So in QBO, mouse over Reports, go to Standard Reports, and you'll see the balance sheet show up in the business overview section. We're just going to select the standard balance sheet here. The balance sheet presents a company's financial position as of a specific date. It's going to list out the assets, which are all property that the business owns. It's also breaking the assets down into categories. So we've got current assets. Those generally would be used within a year or turned into cash within 1 year. Then we've got our fixed assets. We don't have any, but if we did, they'd be things like buildings, land, and equipment. Other assets might include intangible assets like copyrights and patents. But assets in general are the property owned by the business. And then the other part of the balance sheet shows how the assets were financed. So we have liabilities. That's what the business owes. These are the debts of the business. We also have those broken into two categories. Current liabilities, which means the liability is due within 12 months, or long-term liabilities. It's due outside of 12 months. And then finally, we have equity. Equity is also referred to as the owner's equity. Equity is the difference between the total assets and the total liabilities. It represents the owner's claim against the assets, the owner's claim against the business property. And we break the equity down into a couple of different categories. The owner gets equity when the owner makes investments into the company, and then the owner gets equity when the business makes a profit. The owner owns the profit, and that's why we see the net income line here. Net income at the end of the period gets rolled up into this account called retained earnings. This account is the cumulative record of all the net income that has ever been made by the company since it was started, less any owner withdraws. And that's sort of the overview of what information goes on the balance sheet. And now we're going to customize this one. We want to make sure that it's showing as of the end of January of 2025. So the date that we're going to specify is the to date. That's the important one here. So I'm going to change that to January 31st, 2025, and then the page will reload. The from date doesn't really matter on a balance sheet like it did with an income statement, because what's being shown here are the balances of these asset and liability accounts at the particular point in time, not covering a period of time, but rather a point in time. And that's why the to date is really the important date there. The numbers shouldn't have changed from the default because the default was showing the entire year. The only way that they would change is if you had some date errors inside of your transactions that you recorded, and maybe you put something outside of January. Then the balances could change, but they shouldn't. Once again, we want to make sure that the balance sheet is presented using the accrual method of accounting, which it is. And then I'm going to make a couple of settings changes. So I'm going to click on General Options, and I'm going to make sure that the box is checked for don't show zero amounts. We don't want them cluttering things up. And let's see what else. We're going to show the negative numbers in parentheses if there are any. Don't think there were not. So we're not going to see those negative numbers show up, but we're going to save this customization as well. So click on the Save As button, and we're going to get rid of the hyphen copy at the end there and just save it as balance sheet, and then we're going to put it into that financial statements group that we set up earlier. And now we're going to click Save. So now when I go to Reports, it's in Custom Reports, I'll see both the income statement and the balance sheet under that grouping of financial statements. Next, we're going to take a look at the statement of cash flows. So in QBO, mouse over Reports, go to Standard Reports. In the Business Overview section, we're going to see the statement of cash flow, and we're going to select it. So the statement of cash flows shows activity involving the business's cash accounts during a period of time. So the from and to dates are important again because it's showing activity during a period of time. Once again, we're going to set this up so it's looking activity during the month of January of 2025. So the from date's already set there, and we just had to fix the to date. When we refer to cash here, we're not necessarily talking physical cash. We're talking about the balance of the checking account as well. And we break the cash transactions into three different categories, into three different groupings. So we see the operating activities, we see the investing activities, and we see the financing activities. In this particular statement, we do not see any transactions in the investing activities category, but we do have information in the financing activities section, and then it looks like we have a lot of activity in the operating section. Well, really what's going on here is they're using the indirect method of preparing the operating section. So they're starting with net income and they're making a bunch of adjustments. Most of the adjustments, if not all of them in this case, are dealing with timing issues between when a transaction impacted net income and when it impacted cash. But the operating activities section, when we look at the total there, that's an important number to look at. We want to make sure that the business activities that it does to earn funds, to earn money, is showing a positive flow. So that's important to see a positive flow there. In the investing section, we'd see the cash involving the business's long-term assets. So if they bought things like property, plant, or equipment, or sold off those things, those types of transactions would show up in the investing section. For a growing business, you oftentimes will see a negative outflow in investing. That would indicate that the business has more cash going out for those long-term assets than it does cash coming in from the sale of those long-term assets. If you see a positive flow, that might be the indication of the decline of a business. If they're selling off more of their long-term assets than they're buying new, that sounds like a contraction in the size of the company, possibly. In the financing section, in the last section, we'll see things like if the business took out any cash loans, or if they paid cash on the principal of any loans back, or if there were any cash investments by the owner, or any cash withdrawals or cash dividends taken out by the owner. Those types of transactions show up in the financing section. If you take our Principles of Accounting 2 course here at GRCC, you'll learn how to prepare one of these statement of cash flows for a business. So we are going to make a couple of formatting changes here. So I'm going to click on the general options. Once again, we're going to not show any zero amounts, and we're going to show the negative numbers in parentheses. And this financial statement did have some negative numbers, so we see some of those now. And then we're going to save the statement of cash flows to our financial statement group of templates. So click on the Save As button, remove the extra words after the report's name, and we're going to add to the group, specifically the financial statements group, and then we'll click Save. So now, once again, mouse over reports, go to custom reports. You're going to see all three of these financial statements that we just ran through listed out under that group's heading. So now we're moving on down the list, and we're going to take a look at some of these reports that fall into this bucket of who owes you. So when we're talking about who owes the business, we're talking about the business's accounts receivable account. We've got detailed reports here depending on what information we're interested in looking at. And what we're going to take a look at today are going to be our accounts receivable aging reports. Now you see that there's two of them. There's the account receivable aging summary, and there's the account receivable aging detail. So the aging summary is going to group the outstanding invoices by customer name, whereas the aging detail is going to group them by customer name, but that it's going to show all the individual invoices that are owed to us still. Whereas summary would just add up all the invoices for each customer and show the total. The detail would show each individual invoice that's owed to us as well as the total for each customer. And the book wants us to do the accounts receivable aging summary, so we're going to select that. And the first thing we're going to do here is we're going to change the date to January 31st. We're pretending like that's today's date that we're preparing this report for. And what we see here in this account receivable summary report is the different customers that owe the business money. So it looks like Brian Daly, Carlos Hafra, and Joseph Asher owe us. The total balance of account receivables listed here, and then the individual amounts that each customer owe us are listed there. If we sum those amounts together, it would arrive at that same total. And then we have these columns indicating how long these customers have owed us. So all of the accounts receivable that are shown here are in the current category, and then these other columns are for past due, so 1 to 30 days past due and so on. So we prefer to see our accounts here and not over there, because the longer they've been outstanding, the less likely it is that we are not going to be able to collect on them. If the business is using the accrual accounting method, they may, at the end of the period, make an estimate of the uncollectible accounts receivable and record that through an adjusting entry with a posting to a bad debt expense account. That's if they're using the allowance method for doubtful accounts. That's also a little bit above and beyond the scope of the class, although you probably did touch on it in your financial accounting course. We're going to make a couple of modifications to the way this looks here. I'm going to click on the general options here. We're going to make sure that we're not showing zero amounts. We are going to select this aging group of options here. The number of days per aging period, we can specify that. You can see each of these columns has 30 days in it. We can change that if we wanted, and we can change the number of periods, but the book says to roll with 30 and 4, so that's good. And I think we're ready to save this customized report. So I'm going to click Save As. I'm going to put it into a new group, and this group is going to be called Customer Reports. I'm also going to remove the word copy from the name of this custom report and save it. So we're going back into the reports, and then standard reports area, we're going to talk about another one of these categories of reports. And what we're looking at right now is going to be our sales and customers group of reports. Just like the name implies, these reports provide detailed information about customers and sales transactions, including customers list, product and service lists, and so on. And we're going to be looking at a couple of these. And first we're going to look at the sales by product and service summary report. So I find that here. And I'm getting a notice here that I don't have any information. That's because the date range that we've specified, we want to show the activity during January of 2025. So the from date will be January 1st and the to date will be January 31st. So now that I've made those date changes, I can see that I'm seeing some activity. So I'm getting a breakdown here as to how we earned our money during the period. So it's got these categories here of our different items in our product service list. So we had the category of pet care, and it shows all the different services that fell into that bucket. It shows the number of times that we sold those things as well as the dollar amount of those sales. It took this dollar amount and expressed it as a percentage of this total, and then it took the average price for each category as well. If cost of goods sold applied, if we're talking about inventory items, products, we see those amounts here in the cost of goods sold column, and then it shows the gross margin, which is the difference between the revenue and the cost of goods sold. So for example, for this dog food line, we had 420 total revenue, 150 cost of goods sold, 420 less 150 is how they arrived at 270, and then they expressed the gross margin for these items as a percentage of revenue. So they took that 270 and they divided it by the 420 to get a gross margin rate for that line item. So we're going to make customizations again here. So we want to make sure the accounting method's accrual. It is. If I click on general options, I want to make sure that I'm not showing zeros and that any negative numbers would show up in parentheses. And once that's been done, we're ready to save the report. Click the Save As button, and we are going to add this to that customer reports group that we created earlier. And then the name, I'm going to remove the word copy there and hit save. So now I'm going to go back into my standard reports. So mouse over reports, select standard reports. In the sales and customer group, we have this report called the physical inventory worksheet, and I'm going to select that. So this worksheet is used when taking a physical count of inventory. It's going to list all the different items that are in our product list in QBO, as well as the quantities on hand per QBO. We also got reorder points. And if we had any purchase orders outstanding, it would tell us about that as well. So you can see here is where we would enter the information from a physical count. So we'd go on our floor or wherever we have our items stored, and we would take a count. If we found differences between the QuickBooks record of the quantity on hand and the physical count, we could come up into the Create button, and under the Other column, we have a spot for an inventory quantity adjustment. I'm not going to demonstrate that today, but that's where we would handle that. The text does not ask us to save this report, so I'm not going to. Now I'm going to move into a different bucket of reports, so I'm going back to our standard reports. Mousing over reports, selecting standard reports, scrolling down the list. Now we're in the bucket of what you owe. So here we're talking about accounts payable and other liabilities here. And we are going to specifically be looking at these accounts payable aging reports. We have two of them, the aging summary and the aging detail. The aging detail is going to show all the individual bills that we owe on, whereas the aging summary would sum all the outstanding bills and report a total for each vendor that we owed. And the text wants us to select the accounts payable aging summary, so I'm going to click on that. And this report is going to show all of our balances on our accounts payable as of a particular date, and the to date here is going to be set up as of January 31st. And by changing that, our report has refreshed, and we can see that the bills that we have outstanding that we haven't paid moved into different age categories because it was looking at it as of this date as opposed to the date of my video here, which is October 6th. So they were all showing as really overdue, but as of January, not so much. Now you might be wondering if all the transactions that we recorded were all during the month of January. Why is at least one bill here showing as being overdue, 1 to 30 days past due? Well, I think the terms of that bill were that we had to pay it in 15 days, so that's why it became overdue in that category a little earlier. Whereas the other terms, I think, gave us 30 days before it was due. All right, so now we're going to make a couple of formatting changes here, clicking on General Options. Once again, we're not going to show zero amounts, and we're going to show the negative numbers in parentheses. Typically, on this type of report, you wouldn't see a negative number, but they still asked us to do it, so we'll do it. And in this aging category of settings, we're going to make sure that the days per aging period is set to 30 and the number of periods is set to 4, which they are. And then finally, we're going to save this report. So I'm going to click on the Save As button, and we're going to get rid of the extra words at the end of the name of the report. And then we are going to save this to a new group. We are going to save it to a group called Vendor Reports. So we're going to click on that drop down, add new group, and then type in vendor reports. And then I'll click the save button. So now we're going to take a look at some reports that fall into a category of for my accountant. So I'm going to mouse over reports, go to standard reports again, and then scroll down the page till I see that bucket, that category of for my accountant. And the first one we're going to take a look at is the journal report. So I'm going to click on that. And we're going to specify the from date and the to date here, because the report's not showing any activity. and we're going to show the activity during the month of January of 2025. So the from date is the 1st of January and the to date is the 31st of January. And now we see a bunch of journal entries throughout the period. And this report shows all of the journal entries behind all of the transaction screens that we've looked at and entered transactions into throughout the semester. So anytime we're clicking on the Save button on a transaction and going to the More Actions button and looking at the transaction journal, all those journal entries are now showing up here. So we've got details on every one of them. This is an interactive report, as are all the reports. So if we wanted to look at a particular journal entry, we could click on the amount of the journal entry and we could pull up the entry screen and review it, make edits to it, void it, etc. Now we're going to save this report, but we're not going to save it into a category or bucket. We're just going to click Save As and then remove the word copy from the name and then click the Save button. So now I'm going to go back to the standard reports, and rather than go the way that I've been going every single time, I'm going to click this link to go back to the standard reports. Now I'm going to take a look at a report that is referred to as the audit log. And the audit log can be found in the business overview. Also, just remember that any report that you want, if you know the name of it, you can just type the name so you don't have to scroll and look for it. Alright, so the audit log is the one that I want to select now. So the audit log is going to show all of the activity inside of the QBO company file. It's going to show logins and logouts. It's going to show transactions that were entered. It's going to show that I reconciled the checking account earlier in this video, and so on. So it's got a ton of detail. We got time and date stamps, and we can get a lot of detail about who's changing information inside of our system. When used appropriately, the audit log improves internal control by tracking any unauthorized changes to accounting records. The owner, manager, accountant should periodically review the audit log for any discrepancies or unauthorized changes. Now, something that we haven't got into because it's not in the text at all, but when you set up QBO and you have multiple users, you also have ability to give rights and restrictions to users about what they have access to and what they don't. That's a little bit above and beyond the scope of this course, but is something to consider looking into further. Another thing too to mention here is that obviously you can filter for different users inside of QBO. You could change the date range showing activity, and you can also filter by different events, and you might be interested in uncovering fraud, and maybe you're interested in, hey, is anybody deleting anything or voiding anything suspicious? So you can pull that up and take a look if that had ever been done inside of your system. You can also get to this audit log through the settings icon, and where's it at? Under the tools group here, it's right there. Just like about everything in the software, you could also search for it up top, as you could any of these reports. In section 10.11 of our textbook, they discuss the concept of tagging transactions, and this actually has been phased out, and the author of our book has an updates page that you can find the link to in our course resources area. And you see here we have tags update, and there's a different section of the book. So this 1011's been replaced, but it's not in your online book in McGraw-Hill yet, so you'd need to review this section if you wanted to read over it. So I pulled that up here, and you can see custom fields are now replacing what were formerly known as tags. Custom fields allow the business to do a little bit more powerful reporting. A friend of mine recently set up her QBO system for a transportation company, and we had all these different expenses, and we wanted to track them by the expense, of course, but also we wanted to track them to individual truck drivers. So we ended up using the custom fields area to track them per truck driver, so we could run expense reports on each individual truck driver instead of just the line items for the expenses. So we had things like fuel expense and washes expense, and we could look at that in total, but then with the custom fields we could also look at it by driver, individual driver. So we're going to practice that a little bit here. So in our QBO company file, we're going to click the gear icon, and then we're going to select custom fields, which is in the list group. The business wants to track which contractors are generating the most revenue for the company. And to do that, we're going to create custom fields for those contractors. There is a little video here. If you want to see how these work in great detail, you can click on that. For right now, though, I'm just going to click on this button to add a custom field. So the name of the custom field is going to be contractors. The data type we're going to specify as text and numbers. Category we're going to select is going to be transaction. And then for the forms, we're going to check all these boxes. And then we'll click Save. To view the custom fields that you've already created, you can mouse over your gear icon, go back to your list and select custom fields. And now you can see that custom field of contractors and the different forms that it's applied to. In the actions column here, if we wanted to make any changes as to the name of it or what it applied to, we could edit it. We can also make it inactive if we decided to. If we wanted to add another field, we could click up here and do that. So to demonstrate how these custom fields would work with a transaction, we're going to take a look at that. So I'm going to mouse over Create, select Invoice, and now we see that when we added that custom field, we can see it appear here on the screen, and we would type in the name of the contractor that this transaction related to. Now, by requiring a user to enter the name of the contractor in manually, we're introducing the good chance of making mistakes. So actually, this is what the text said to do, but I don't think it's a very good practice. So I'm going to close out of this invoice, and I'm going to leave without saving. And then I'm going to redo this and just sort of demonstrate this. So I'm going to add another field. You don't have to do this. I'm just showing you something. I'm going to type in contractors 2, and the data type, I'm going to say drop down list. And I'm going to say apply it to every transaction, and then I'm going to check all these forms again. Now, what I did by specifying drop down list instead of text and number is I'm creating a drop down list essentially. So what I can do here is refer to my vendor list and check the spellings in the exact layout string of them, and I can type those names in here. So I remember that B. Daly was one and Evan Henry was another. There are others, but I'm just going to demonstrate with that. If I wanted to add more to the list, I can add an item. I'm just going to leave that as is for right now. Save it. Go back to create an invoice. I'm going to see both custom fields, and now this is a better approach because now the user doesn't have to know the exact spelling. We got them right here. We're not saving this invoice though, so I'm just going to close it out and leave without saving. The text has a section 10.12 that talks about the different financial reports that we looked at today. You should be aware of what information is reported on a profit loss statement, a balance sheet, and a statement of cash flows. Read through this section about tax forms. You're not going to be filing any, but you should be aware of the different forms that businesses do need to file. And then we took a look at some of the management reports like the account receivable aging report and the accounts payable aging report and so on. So take a look at this section, read through it. All right, that is it for chapter 10 for Mookie the Beagle. You're going to do similar activities inside of your Hafra Cyber company. You're going to be running some reports. You're going to be making some customizations and saving them. In your Connect problems, you're going to be asked about some of the information that you see on each of those reports. And also, don't forget at the beginning of the Chapter 10 activity, I want you to do the bank reconciliation for Hafra Cyber. You'll find the file to do so under the course homepage and go to course resources. You should see the Chapter 10 Hafra Cyber bank statement that you can use to reconcile, and just follow the steps in the Mookie the Beagle video that I just finished here to see how to do that. All right, if you have any questions at all, don't hesitate to reach out. It's been a great semester. It's been great to have you in class. I know that I'll see some of you in my BA160 class, which starts at the end of this one. So I probably will release the information from that class a little bit early so you can get a head start. But either way, it's been great to have you in this semester. Don't forget that I run tutoring services for GRCC, so if you have any questions with any business or economics classes at the college, please reach out. I can help you. I also have a small staff that help me assist students as well.